tachograph card. For further information or to apply, please call 093 55 920.
If you need any phone numbers or email addresses, please call our reception on 091 77 0077. Search hashtag Galway Jobs on social media or go to galwaybayfm.ie/jobspot.
You're listening to Galway Bay FM and this is Galway Talks with John Morley. Now we're joined by Dave McCarthy from McCarthy Associates in Woodkey to have financial advice. And Dave, a new survey finds that 40% of people would reduce house insurance cover if they were under financial pressure.
Yeah, this is a bit, I would say a little bit disturbing in the sense that people might make a knee-jerk reaction if they're under financial pressure and look to reduce their outgoings, which is understandable. And one of the things that a high percentage of them think that they would do would reduce their level of house insurance. That's fraught with all sorts of problems. You make a claim and you reduce your level of cover and your claim will be reduced pro rata, because claims now are based on the fact that you have a proper value, reconstruction value in your house. So if you reduce that by 50%, any claim you'll have will be reduced by 50%. So all I would say is if for somebody who might find themselves in this situation, be very careful before you do it. It's like, for example, medical insurance is one area too that people have a tendency maybe to get rid of if they're under financial pressure. And of course, once you do that, there's all sorts of consequences down the road. So be very careful if you're thinking of cancelling any of these things, and just be aware of the consequences. If you do, don't make it a knee-jerk reaction and just see if you can address your problems in another way.
Another question in, I've heard the term self-directed mentioned in relation to financial matters, but I do not understand exactly what it is. Can you please enlighten me?
That's in relation to pension. When you take out a personal pension, and that's what we're talking about here, not an occupational scheme if you're in employment. And self-directed means that you can go into a structure where you can direct how the monies are invested. For example, you could direct that you purchase individual shares, maybe even a property, and also other different assets rather than going into a traditional life assurance fund. They're operated generally by life assurance companies and maybe some others. They're kind of a complex structure, and it's definitely an area where you would need a lot of advice, and there are costs associated. So that's what a self-directed is.
Another issue, unfortunately, the outdated view that loyalty pays can cost you. For example, loyalty to a bank, insurance company or health insurer, or a utility company.
Yeah, I suppose a lot of people feel, or maybe traditionally felt, that they had a loyalty to a bank. They've dealt with them for many years, and accordingly they think to themselves, well, look, I don't want to move because of that. No, they may not want to move because of the hassle, and that's understandable. But don't have loyalty to any particular institution because you'll end up paying for it. What do I mean by that? Like, for example, health insurance. Maybe you can get a deal better, cheaper somewhere else, or a utility company, or maybe life assurance, and that's a bit more complex. But if you have it in your head that you have a loyalty, in inverted commas, to any provider, well then I have to say, dare I say it, you're outdated thinking. And the idea and concept now is that you should move around and get the best deal possible, and that's what it's all about, the bottom line, not any sort of sense of loyalty.
Another question, I'm 65 years of age and considering gifting a substantial portion of the funds I have in deposit to my son to help him purchase a house. I'm concerned that maybe this might cause a problem for me when I retire. Have you any advice?
Yeah, I think this is something you need to think about carefully. I mean, it's a lovely thing to do, and it certainly is. I'm sure your son is going to be very grateful for you helping him out financially. But I suppose it's predicated on one particular issue, which is, have you enough resources yourself for the rest of your life? At 65 years of age, you know what they say, John? And I know you wouldn't think of this, but they say the 60s are the new 50s. In the 70s are the new 60s. In the 80s, you're completely humped. So I suppose go back to this particular person. I'm just saying you have a lot of years ahead of you, and it's important that you look after yourself financially, and that you are looked after financially before you start being so generous maybe to one of your offspring. Because once the money's gifted to him, goes into a house, whatever else. Dare I say it, no matter what you might be thinking, it never really comes back to you. So it's all about whether you are financially well structured, that you don't require those funds.
Another question, are on-post interest rates still worth looking at?
Yes and no, in the sense that really on-post is just like a deposit taker, really. Their interest rates are influenced by general interest rate trends, and they are, I suppose, will fluctuate and do fluctuate in tandem beyond even the fixed products, within the fixed products in relation to bank interest rates. There still is maybe a bit of an idea that on-post rates are the best place to go, but you're still back to the issue of how much you're going to get in a return. It's deposit rate based, so if you want more attractive returns, you need to go elsewhere.
Another question, I own an investment property and I am in the process of renegotiating the terms of my mortgage with the lender. I did not have any life cover attached to this loan previously, and they are now insisting that I take out a policy. Can they do this?
Okay, first of all, this is an investment property. Obviously, it's not their family home. The second part of it is, somebody might be thinking, well, how come you don't have life cover on it? Well, I would say this mortgage was probably taken out a good number of years ago, many years ago, where at one stage lenders, to be competitive in the marketplace, they weren't insisting on life cover. That is not the case and hasn't been the case for many years. But once you go back to renegotiate the terms of any loan that you have, and in this case it's a mortgage, well then everything is on the table. In other words, you're agreeing to a completely new loan, and they will issue the terms under which a bank is prepared to lend you that money. So the fact that you've had a mortgage with them previously and you still do, and you know life cover, is irrelevant. So unfortunately the bad news is, if you want to proceed with this, you're going to have to agree to the terms that they present you.
Another question from a listener. My loan was moved to a vulture fund. I'm up to date with my repayments, but they are looking for financial data on me and I don't know why. Why is that?
Well, that's interesting. Vulture funds have a tendency to try to amass as much financial information about you as possible, and there's a very good reason for that, and it's self-interest on their part. When a vulture fund takes over a loan, they only just get the loan and the attached documents. They don't really have any information on you. They have very little information on you in terms of your financial structure. And by the way, you're not required to give them any information unless maybe you were in arrears with them. That's different, but you are up to date. And by the way, I want to stress one thing here, John. There is a misconception out there that if you have a loan with a vulture fund that you're under water, you're in serious trouble. That's not the case. Hundreds of thousands or tens of thousands, whichever, I'm not sure, have good loans, performing loans, and people listening this morning who had their loans transferred through no fault of their own when it was sold on by a particular bank or an institution. And in this case, this particular person is up to date. So I just want to clarify that a vulture fund loan doesn't mean that person has a problem. But going back to the question, don't give them any more information than you're happy to give them, and keep them in the dark. I think a rule of thumb I would always say, give as little information out as you have to any financial institution, right? Other than the mandatory requirements if you're going for a loan or that. But don't willy-nilly give them any more information, because it goes into a system there and there's a lot of data on you as an individual.
My instinct that this text in is a bit too broad, Dave, but who would you recommend to get life assurance with, is the question.
It's not the individual company that matters. It's the rates and what you would pay for that. The companies don't really matter. They're all much of a much, but it's really down to cost. Who is the cheapest for you? You can, there's only about 5 or 6 companies there. You can shop around online yourself, or you can go to an advisor who will do it for you. But the individual company is not what matters. Yeah. It's basically who will be the cheapest.
I know Health Insurance Ireland have very good information in relation to that as well.
Well, health insurance is different. Sorry, was this to do with life insurance?
life insurance. Yeah.
Health insurance is a much more complex area, so what I just said really doesn't apply to them.
Okay. Just some other topics I want to bring to your attention, Dave. In relation to auto-enrolment, people are being who are eligible for the pension auto-enrolment are being urged to pause before considering to opt out from that scheme. The state-sponsored scheme, also known as My Future Fund, was designed to cover people without work-provided retirement plans and was launched on the 1st of January, and it's impacted 770,000 people. But from the 1st of July, most of them will be able to opt out from it with the window open for 2 months. But they're being asked to consider the consequences for that further down the line now.
Who's that coming from?
That's coming from Caroline Rowan, who's the head of retirement solutions at risk management for Aon Ireland.
Okay, so it's not coming from anybody associated with auto-enrolment. I would say the answer to that is also got to do with the fact if you want your contributions rebated to you, right? It's not just a question of pausing. So if there are people out there who want their contributions refunded to them, they have to do it in the next 2 months. So she's not mentioning that. And maybe, I suppose in one sense I wouldn't disagree with her, but if you want your contributions back, you need to do it in the next 2 months. Now you can pause it outside of that period, but that's a key issue for many people.
Just another issue I want to bring to your attention. We heard from the Climate Change Advisory Council that Ireland's dependence on fossil fuels and transport is leaving the country exposed to repeated fuel price shocks as global energy markets remain disrupted. They argue that we need to move towards a greener economy, Dave, but what they also have criticised is the kind of sticky plaster nature of government's approach in the last few weeks, and that we should have had more targeted measures. What's your thoughts on that?
Well, we should, but I suppose it's like everything else. If you look at the way they have, I suppose, not developed the electric car market to the extent that they should have, and it's very, these are very expensive vehicles. You look at our dependence on fossil fuels for our energy in terms of, obviously, heating, home heating and electricity and that. I think the issue really here is that it takes so long to put in place some of these cleaner sources of energy that we haven't really done enough to take ourselves from, our dependency on fossil fuels onto cleaner energy. And I suppose many governments have been a bit remiss in that. And, the demand, as we know, say, for example, in the electricity space in Ireland is enormous. But I suppose we're going to be very dependent on fossil fuels for many, many years to come.
I know we are hopeful of our friend Donald Trump signing that peace deal in the Middle East, Dave, and we are hopeful of that. But I know there's a warning coming from the Central Bank Governor, Gabriel Makhlouf, that an interim deal to end the Middle East conflict will not necessarily bring an immediate end to the global energy shock, with damage to energy infrastructure potentially causing lingering price pressure. So it looks like we could be dealing with the offset of all this for the next year and a half at the very least.
Well, two things on that. First of all, do you know how many times he said a deal had been reached in the recent weeks? 38 times, right? So the bottom line here is...
Where are you getting that from? The stock market, is it?
Oh, yeah. That's well reported on. 38 times. No, I didn't sit down and count them myself. Right? I have better things to be doing in my life than to be listening to that fella constantly. But yeah, he's not wrong in what he said there, the governor of the central bank. But there's a lot of uncertainty to do with this, and if you try to make any predictions here, we have to wait and see how markets pan out in terms of oil prices. Oil has gone down below $80 a barrel, I think, at the moment, which is considerable reduction, and it's back to the pre-war price. So it depends on how quickly I suppose the infrastructure picks up. He's right to give that warning, but I suppose the proof of the pudding is in the eating. We'll see what happens.
I know the hospitality sector more broadly are welcoming that reduction in VAT, which is coming down the tracks very shortly in the next month or so, Dave. But a move by Dublin City Council to double the development levy on the construction of new hotels, hostels and apartments has been criticised by the Irish Hotels Federation, welcoming a reduction in VAT but criticising a levy.
That's insane. I read about that. It's just insane. I saw where they took a typical hotel, I was thinking, I don't know what the size, 20,000 square metres or whatever, where it was going to go from 2.5 million levy to 5. You need we need more capacity. Dublin badly needs more capacity. We're getting some more of it here in Galway. There are some hotels being developed here as well, which is a great sign. But the demand is considerable. And then to make it as difficult as possible, or more difficult for developers, or less attractive, I think it's just crazy. Just classic example of a public body not having joined up thinking, and at the end of the day, in my opinion, not having the people they serve at heart when they do something like that, and just looking after their own financial structure. And we have that in Galway with the councils here, and I could keep you talking on that subject for many hours to come.
Is there not an argument, though, that if you're going to have more hotels and hostels and apartments, that you need the wraparound facilities and public infrastructure to deal with that? And the only way to do that is by putting a levy on those that are coming in and putting that extra pressure on the system.
I would agree. In theory, you're right, and in practice, that's where the problem is. Are you following it on as a public body with those services? There's a tendency here. It's like, for example, I remember back in the day when the Greens were in government and they brought in a carbon, like, I don't know what they called it, a carbon tax, an extra tax on petrol. This has gone back years. That had no effect other than the fact that it made people have to pay more for their fuel and the money never went anywhere for anything positive. So I suppose the theory of what you're mentioning is correct, but in practice, I don't know. It depends on how they utilise that money, but I'd have my doubts.
We know the government are given a €750 million package to deal with the rising fuel costs, and it's due to expire at the end of July. There will be talks in the next 2 weeks whether to extend that or not. Is it dependent on whether the peace deal holds, or what do you see happening?
Well, I think what it's dependent on is the price of oil and the price of energy. And it looks as if hopefully we're going into a period where that has reduced to a level that it's manageable. You know, we discussed this, as you know, John, a few times in the past when this whole crisis arose, and you spoke, and rightly so, about the delay of government bringing in a deal and to what extent they were going to allow it to continue. And as I said, it's a moving space. It's like the comments from the central bank governor there as regards what will happen in reality. This is a moving issue, and I think the government are right to approach it the way they did. And we're not going to get into all this thing about fuel protests and all of that. That's history as far as I'm concerned, and the rights around that's another day's work. But I think that this proves it now, that they were right to take the approach they've taken. But people have to understand, if they increased the supports as a result of a crisis, and if the crisis starts to diminish, which is the price of oil, well then, you know, people get used to supports and they find it very difficult to have it taken away. So we'll see what they decide to do.
Dave McCarthy and McCarthy Associates. Okay, thanks for joining us on Galway Talks this morning. I'll let you know who the winner is of our Oxygeneration session for one person and their friend. The winner today